Ladies and gentlemen, Happy New Year. This is Christopher Aaron. Thank you for tuning in. The point of this channel is to look at the trends that are developing in the gold and silver markets from a technical basis. Now, if you do not like the charts, this is not going to be the channel for you. If you are at least a little bit open to the charts, though, I would say stick around because there is some very valuable information that we can get from charts. Even though the charts don't tell us why, they only tell us the what. And the why we can get into at another point. But the what of what is happening, the what of the market. So we have seen a very nice rise happening here in the gold price. We are focused mostly on gold and silver, nothing against platinum, palladium. They just are not the historic monetary metals that I believe are once again becoming remonetized by the market, by the sum of humanity. So nothing against those fundamentals, but let's look at what's actually happening here in the charts. Very nice rise over the last 3 weeks. When did it start? Within days of the last Fed meeting. How ironic, right? How many times has this happened where people sell gold going into the Fed meeting and then the price just shoots up for weeks after that? And I think this one fooled people again. People said, oh, the rate hike is going to be bad for gold. And sure enough, gold shooting higher after the rate hike, showing moderate weakness. This looks like a short-term top. I've been expecting this to form in this region. Premium subscribers know about that from the last weekly update. But we're expecting a top to form in this region and come back into the upper to mid 1200s for a critical low. We'll put this into perspective. This is going to be a huge low. Whatever drop that forms after here is basically, in my opinion, the last time to buy in the 1200s ever. Turning to silver, it's been a very nice rise from 1560 up to the low 1700s, and it's really just perfect because so many people are getting tired of silver. So many of the long-term holders are giving up. They think these gyrations between $15 and $18 are just going to go on forever. And if anything, the evidence shows that a major move is shaping up, but it takes longer to unfold than people expect often. So that is the point of this channel, to show you what is shaping up. Now, if you hate the charts altogether, once again, I said this just won't be the channel for you. But if you want to see how these can be valuable, I just want to remind you of one thing. We were not producing content in 2011. Nor 2012, nor 2013, nor 2014. When did we start producing content here? You can go back to the archives and look at this. It was the end of 2015. Not the exact bottom, but pretty close to it in the grand scheme of things, especially if you were someone who was buying all through these upper ranges. Sure would have been better to have following the technical maps that we are proposing here. We're proposing them. This one happened to be fairly accurate. And I would say the other thing that we have gotten fairly accurate, once again, is the retest, switching over, the retest from this long-term downtrend. Now, this final green zone was shown here in green 4 months ago. So when we broke out of the long-term downtrend, we then drew in this green zone here and said, gold is likely to come back somewhere within the green zone. We can't give you the precise to the dollar amount. That's the realm of short-term trading that we're not doing right now. But we can give you a high probability for the retest. And a retest simply means that there's a trend. There are peaks and lower peaks and lower peaks and lower peaks that are forming. And then we see a break of that trend. We see a higher peak forming here in August, September of 2017 relative to the mid-2017 peaks. A clear higher peak. Trends often need to be double-checked. So the market will come back, and this is the zone that we drew here. And I know a lot of people were doubting this, and they were not paying attention to this, and they were selling into these lows. So if you had just followed our two signals, which was this signal, the bottoming signal that was coming into play in August of 2015, and if you had just paid attention to this retest here that is forming just now, you would have been okay. You would have been okay. You would have avoided a lot of the anxiety that comes from listening to a lot of the people saying gold's going to 3,000 because there's a nuclear war, or gold's going down to 500 because the stock market is going up forever. If you just pay attention to some of these signals, they can bring some sanity to the markets. That is all. Versus just seeing a completely blank price, not paying attention to the trends can be very deceiving sometimes. Let us move on. The gold miners are in one of the healthiest basing processes that could possibly be forming, especially when we consider that this level here from the generational bottom in late 2015, basically when we look at valuations of the miners, this is the cheapest that they have ever been in the history of mankind, actually, or in the history of mankind's record keeping. This bottom that formed here in 2015. So they're not quite that cheap. We had a nice rise beginning of 2016, gave back about half of that rise. And when you consider that an asset class that could not go to zero was the cheapest that it had ever been across multiple metrics that we follow, I would say there is still a high value proposition here in this sector at the current point. We can see the trends that are playing out now. The long-term downtrend breakout. Look at the surge that occurred after this long-term downtrend breakout. The interesting thing here is that there was no retest provided. This is what's so challenging about technical analysis. We can't say 100%. So if you had waited for the retest here in gold in 2016, as we saw, in the gold miners, as we saw in gold just now, if you had waited for a retest, you never would have bought. So that's the challenge, is that retests can form, they cannot form also. We have to lay out the probabilities. This is why we've been fully invested here in the mining sector for the last year, is because we believe another move like this is setting up to round out what is going to look like a 6 or 7 year inverse head and shoulders pattern. It's going to be the most healthy pattern that you could ask for. It's going to be a lot better to be making your final purchases now than 6 to 12 months from now. I'll tell you that right here. Switching over to look at silver, for that. And silver showing a lot of relative strength, very impressive. Breaking through, we had a primary downtrend here from the September peak. Paying no respect to it. No respect whatsoever to a peak, a lower peak, and then you would expect a lower peak to form here. Paying no respect. So this is showing us that the market is changing behavior. I'm never out here to say that I know the full behavior of the market, twist and turn up and down every single moment. But what this allows us is to plot on a map, if you will, the behavior of the market. And there are times where it is important to say, we notice a trend that is changing. There's a change in the behavior of the silver market here, ignoring a downward trend. When we put that together with what we are seeing in the gold market, it's getting ready for its next test of the 2016 highs. We put that together, and I would tell you that silver here, having fallen 68% from its 2011 high, represents an excellent value. I think over the short run, we will see a minor retracement over the next 1 to 6 weeks back down into the vicinity of this broken downtrend here, probably coming into the mid to upper 16s, depending on how long it takes to come back down into that region. And then silver will be making its next attempt at this primary resistance, $18.30 to $19. I suspect that it will not break through resistance initially. I suspect it will back off one more time As gold breaks through its 2016 resistance, I think silver will lag initially, and this will represent the final buying opportunity for silver in the teens. We will be looking at this sometime in the middle or later part of 2018, and quite possibly from then on, forever, we will be talking about silver no less than this $19 mark. Can we imagine that? Never again. But this is what seems to be shaping up on the charts now. So we're not talking about a skyrocket. Anyone who's telling you that, they're trying to sell you the metals. But we are talking about a basing process that is rounding out here. This is the most healthy long-term pattern that you could possibly ask for. There is a dealership that I know personally in New York City. I wanted to tell you. The name is Bullion Exchanges. I know the owner. I know the shipping department. I know the warehouse department. I know the storefront. And I trust these guys. And there is a coupon code below for $10 off your first purchase of gold or silver of $300 or more. You can see the details down below. You can try them if you want. I think they are a highly reliable group, bullionexchanges.com. If you have a dealership you already know, by all means, stick with them, or maybe try Bullion Exchanges once and see how the service compares. Try it for yourself and then make your own decision. I provide research here in addition to these videos. Just to let you know, if you like this format, we just had a 2017 precious metals review. We reviewed everything that happened across every asset class in the world and then put that into perspective of the precious metals. This is helping some people to finalize their investment plans for 2018. That is the point. This research comes out weekly. It's called Precious Metals Intelligence. You can find more on the main website. We also cover the GDX and the individual miners that we own here, as well as the reasons why we own them. We simply publish the research that we are using here to make the decisions that we're making, so that if this kind of analysis and research makes sense to you, you may choose to follow this kind of research. Separately, I work with individuals, whether you're new, if you're just looking to buy your first $100 or $1,000 in the precious metals and you want someone to explain to you the benefits versus the risks of various ways of investing, from junk silver to Morgan half dollars to bullion rounds to ETFs to options to futures. I do work with people across the spectrum. I also work with high net worth individuals who are looking to invest anywhere up to several $1,000,000 in the space, and we form customized plans with a balanced risk to reward, including allocations into the physical metals as well as into various components within the mining sector. Looking at senior miners, they're already producing gold at this level. They're profitable at this level, so their revenue will be leveraged to the prices of the metals as they move forward, all the way down to the development stage companies which are not producing metal. So you have to realize, if you're looking to invest in the development stage companies, this is extremely risky. And there are individuals out there who are trying to sell you on buying development stage stock in companies that literally have no chance of ever mining these deposits. Ever. Unless gold goes to $10,000 over the next 12 months. Then maybe these companies will receive enough funding and be able to mine the deposits. But otherwise, a lot of these companies that exist out there, they are just sitting on a mound of rock, and they will never get that out of the ground. So I come from an independent standpoint, and I work with individuals so that they understand the risks and the rewards of the various stages of companies that they are investing in. If you want to know more about an individual strategy session, you can once again find that on the main website. I do thank you for tuning in. This is going to be a fascinating year in the precious metals as we watch this age-old battle between gold and government decree once again play out. Now, every other time that this has happened, gold has won. Gold has won this battle. So if you are investing in gold or the precious metals now, you're understanding that. The point of the analysis here, though, is to say, yes, I understand that as well, but the market can act very irrational in the short run to the extent that you can lose 20, 30, 50, 70% on an investment, even related to gold, simply because the market moves irrationally against you over the short run. Let's be prepared, because this market is going to get extremely volatile over the next year. Thank you. Happy New Year. Let's get ready.